This is a discussion about Exhibit 10 in your textbook. We're going to be looking at the different components associated with the object cost. The object cost is whatever we're manufacturing, whether it be guitars, baseball gloves, or automobiles. Doesn't matter. We're going to have the three components. We have the direct materials, we have the direct labor, and the factory overhead. Remember, by definition, the direct materials are those costs which are significant part of the actual item that's being manufactured. That's the material that's coming in. Then we have the direct labor, and that's going to be the wages paid, which are a significant component in converting that, and that's going to be usually the assembly workers, the wages paid on that. Any other costs in the manufacturing process, remember, manufacturing process is going to be factory overhead. That's going to include such things as indirect labor, indirect material, and other factory overhead costs such as the supervisor's salary, the janitors, and so on, the depreciation on the equipment. All three of those costs are going to be used in the manufacturing process to go into our cost object. Any of those material costs that are unused will be held in our, I like to call it raw materials, but they just call it the materials inventory. So those are the, if we're looking at a guitar, that's the lumber that has not yet been put into process that we have that's sitting over there waiting to be called into the process requisition at a later time. So that's an inventory item called materials inventory. It's an asset. It's going to be on the balance sheet. Once the materials are put in and we start using our conversion cost to convert it in that manufacturing process, that's going to be held in an inventory account also. That's called our work in process. So that's the materials or our cost object that's being converted but not yet finished. Again, those costs are going to be on the balance sheet as an inventory item until it's actually completed. Once the product, that item, is completed, then it's going to be transferred to the finished goods inventory. The finished goods inventory is going to be an item on the balance sheet, and it's held there until it's sold. So we have three different inventory accounts on the balance sheet. All of these are current assets. We have our materials inventory, our work in process, and our finished goods. Once it's sold, we then transfer that to the income statement, and it's going to be deducted from the revenues as a cost of goods sold. And of course, we still have to consider the other costs associated with the company, and those are going to be the period costs, selling and administrative.